Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's August the 4th, 2016. Well, so far this year, it's been a very eventful year, but in terms of Rocklinc and our overall performance, things have been going very well. It's certainly one of our best years in terms of the last 6 years since we started the company. We're up about 11% year to date across all of our client accounts, and that's on a balanced portfolio. In other words, about 60% in equities and the rest in bonds. Over the last 3 years, we've been averaging across our whole book of business now just under 11%, about 10.8%, and our equities have actually been compounding north of 15% a year over the last 3 years. So chugging along fairly well. Now, I wanted to update clients on a recent trip to Vancouver. I was out in Vancouver last week for 4 days and attended the Sprott Natural Resource Symposium. And there were some interesting points and observations that came out of that conference. And so I want to pass some of those along to you, and hopefully that will be informative to you. Now, this is a natural resource conference, and there's a big focus on precious metals. And so I have a slide presentation I'm going to walk you through. Now, the first slide that is going to be up on your screen now are a couple of quotes from John Maynard Keynes. I'm not a Keynesianism, and I don't necessarily support John Maynard Keynes, his economics, but I love some of his quotes. And the first quote says, "By a continuing process of inflation, government can confiscate secretly and unobserved an important part of the wealth of their citizens." This is an interesting quote because, as we've talked about, with all of the debt out there, the governments and the central banks continue to push inflation. They're having a tough time getting it, but as we know, the key reason for inflation is that it'll help make the debt more manageable. And so we should continue to expect printing of money and lower interest rates in order to keep this game going. And certainly that was a focus of the conference and the various participants and companies that spoke at the conference. The second quote at the bottom of that first slide, I love this quote, and it is something that I always keep uppermost in my mind, and that is that worldly wisdom teaches us that it's better for reputation to fail conventionally than to succeed unconventionally. And in life in general, most people just go along with the flow, and they don't think outside the box. And what we're attempting to do at Rocklinc is to think outside the box and focus on the unique opportunities and not follow the crowd. It is much better to succeed unconventionally from our perspective, and that's exactly what we continue to do in the portfolios. The next slide, I just take this from a presentation from Marion Katusa, who had a very good presentation, but I thought this was a great summary. And it talks about currency. What's the currency of the various components in our society? He said the currency of kings is gold, the currency of gentlemen is silver, the currency of peasants is barter, and the currency of slaves is debt. Unfortunately, increasingly in our society, in our capitalist society, which is becoming a debt-based culture, most people have become really slaves to their debt. And it's something to reflect upon in how you can avoid, and how we all can avoid being strung up, if you will, by the current economic system that encourages us to go further and further into debt. Now, there was a presentation that was given by Doug Casey, and the next 3 slides just summarize some of his thoughts. And I thought they were quite interesting and thought-provoking. And so on slide 3 and 4, there's going to be a number of points on why the mining business, remember, this is a mining conference, and Doug Casey got up and told all the miners why their businesses are tough. In fact, they're brutally difficult businesses. And so let me just mention the 6 points that Doug Casey gave. On slide number 3, you can see I've listed 4 of those reasons. First, mining, anything that's extractive, is offensive to the environmentalists, or the Greens, as he called it. We live in this day and age where everybody wants to have a rip-roaring economy and all sorts of wealth, but they don't want to extract the very basic minerals and materials necessary to sustain that standard of living. So his first reason was, if you're in mining, you're going up against the environmentalists. Number 2, millennials don't even care about the industry. The whole mining, geology, just isn't something that millennials care about. Number 3, it's hard to find large deposits. It's hard to find large deposits of gold, of silver, of some of the important resources and base metals that are essential to our way of life. And so, people have been scouring the earth for some time, and it is increasingly difficult to find some of these large resources that are going to be profitable if you're a miner. Fourth, mining involves fixed assets. You can't move them. And when you do find a resource, you usually get attacked by NGOs, that's non-government organizations, and governments eventually come and they try to shake you down. On the next slide, slide 4, we have reason number 5 and 6 from Doug Casey why the mining business is a tough business. And he says that mining companies, in the 5th place, spend more money on lawyers than geologists. And when he mentioned this, it was interesting. He had quite the applause in the audience. And so clearly, many of the miners there realize that this is a highly litigious business, and you've got to spend a lot of money on lawyers. And then last, overall, the value of commodities in terms of their price has continued to go down. Ever since the Garden of Eden, we've been becoming more and more efficient at getting things out of the ground, even though it's difficult. And so prices have continued to go down. So here's Doug Casey speaking at this mining conference. He's saying, well, if this is so tough, why are you guys all in mining? Why are you trying to find the gold and silver? And of course, that was the bad news. The good news, as he pointed out, and I'll just summarize that on slide number 5, is that mining business is tough, but there's at least 5 reasons why you want to be, especially in the precious metals area, and maybe uranium and a couple of the other extractive businesses. Number 1, governments are broke. Number 2, solutions being pursued to solve the bankruptcy of the current debt-based system that we have are the opposite of what we need to do, so that the problem is getting more profound, it's getting deeper. The debt binge that we're on continues to become a bigger problem. Number 3, taxes, money printing, and negative rates are all attacking the capital base and the wealth of the middle class. I think most of our clients probably feel some of that going on. 4th, wealth, which is ultimately production greater than consumption, is not growing, and that's because we are in the 5th place consuming virtually everything we produce and more, borrowing from the future. And so, yeah, mining's a tough business, but as Doug Casey pointed out, actually, if you want to protect yourself from a lot of the current insanity in the market and the indebtedness and the craziness of governments, then actually this is probably one of the best times to protect yourself by investing in mining businesses, in extractive industries that are pulling out resources and assets that are going to maintain value and protect your purchasing power. Real businesses, real assets. Now, Grant Williams, he had a wonderful presentation after Doug Casey, and he picked up on the whole issue of debt and why actually, even though it's a tough business, being exposed to the precious metal sector makes a lot of sense. And so on the next slide, it's a very busy slide, and you can stop this video and look at it as we've got it up on the screen there. That slide outlines the current growth in debt over the last number of years. And as you can see on that slide, it starts off in 2000, the year 2000, quarter 4 2000, if you're looking at the extreme left side, and you can see that there was about $87 trillion in debt in the world. By the year 2007, you could see that debt had increased to $142 trillion. And then by the second quarter of 2014, that debt had actually increased to about $200 trillion in terms of credit instruments all around the world. Now, the point here that Grant Williams was making is that this debt just continues to grow and grow. And we've talked about this in compound at a much faster rate than the overall GDP, and that this is clearly not sustainable. If you go over to the far right-hand side and look at that column, you can see the growth rates in debt broken up by the various components in the society that incur the debt, from the households, the corporate, the government, and the financial. And the point that I will just emphasize, you can see the area that's growing debt the fastest over the last 7-8 years is government. And the big concern here is sovereign debt. Government debt is just too large, and it's going to eventually force governments to do some crazy things, to devalue, and that is going to be very good for harder assets and for businesses that we can buy that can help protect ourselves from the inevitable inflation that they will try to force into the system. The next two slides just focus on two countries very quickly, and I'm just pulling out some of the excerpts from Grant Williams' presentation. If you look at the slide number 7, that just talks about China. And it's quite interesting to see the level of growth in China. Back in 2000, they had about $2.1 trillion. In 2007, that had gone up to $7.4 trillion, so you had a tripling. And then in the next 7 years, it went up by 4 times. And so you've got this exponential growth up to 28 trillion. That number is much larger than that today. And as Grant Williams pointed out, most of that debt sits in the state-owned enterprises, which are government-controlled. So virtually it's government debt. The next slide, slide number 8, just highlights some of the challenges, amazing challenges in Japan. We've talked about Japan being a very weak country. And you can see there that in Japan, there's about 5 trillion of their bonds are trading at negative yields. That's about 65% of their bonds outstanding. The BOJ, which stands for the Bank of Japan, owns more than 30% of the Japanese government bonds. That's the JGBs. And the Bank of Japan has not only been buying government bonds, they've also been investing in exchange-traded funds called ETFs and investing on the stock market. So they're actually using printed yen, printed money, to buy the stock market, to prop the stock market up. This again is ridiculous, unsustainable, and it really messes up, the capital market system, the capitalist system, the free market system, valuations of assets, and so on. And it makes it difficult to be an investor. Again, another reason why you want to make sure you're holding fixed and hard assets that will maintain purchasing power. But you can see here on this slide that the Bank of Japan is a top 10 shareholder in 90% of the companies trading on the Nikkei 225, which is astounding. They own over 50% of the ETFs. So the point here, and there was so much more material I could go over, and the length of this presentation is already getting to the long end, if you will. The point here is there's a tremendous amount of debt, and we need to protect ourselves. We need to be careful. We need to be prudent. This isn't just a North American phenomenon. It's not just a European phenomenon. It's a Japanese problem. It's a Chinese problem. This is a global problem. The last slide, I just highlight our main positions. We have about 10% of our client assets now in precious metals, and I've told you for many years why we're here, and this just highlights the performance of our major holdings in this space during this year. So year to date, up until yesterday's close, which was August the 3rd. And you can see that we focus mostly on the royalty companies, the streaming companies, the finance businesses. And you can see that as you look at that graph that's up on your chart, that would be slide number 10. That starts with Franco-Nevada, Silver Wheaton, Royal Gold, Sandstorm Gold, and then New Gold, which is a mining company. You can see the performance of those securities up 61% on the low end year to date on Franco-Nevada, all the way up to 135% in terms of Royal Gold. So this is why we own these companies. I was encouraged at the conference to continue to look for more opportunities in the precious metal space, but to be careful, to own the very best companies, to make sure we've got good valuations and we're well hedged to the current growth of debt all around the world and the inevitable problems that will emanate from this excessive debt. Even today, we saw this morning earlier that the Bank of England has stepped in, lowered rates, and is printing more British pounds. So this game is far from over, and we need to keep focused and be vigilant. If you have any questions, please do not hesitate to call, email, or stop by the office. I trust your summer is going very well. Bye now.